It's Thursday, June 5th, 2025. Breaking news. Tonight, the US dollar just got hit with the most savage tech bro endorsement of all time. Elon Musk says Bitcoin might take over as the world's reserve currency. That's right. America's favorite meme lord billionaire is sounding the alarm on government spending, quoting Coinbase CEO Brian Armstrong's warning that if Congress doesn't rein in the deficit, Bitcoin is going to take over. Elon reposted it. Wall Street panicked, and somewhere deep inside the Federal Reserve, someone just spilled coffee on the money printer. Musk didn't stop there. He called the latest $40 trillion debt forecast a disgusting abomination, slammed Trump's pork-filled spending bill, even though he was on board last year, and reminded everyone that the U.S. deficit is now growing faster than a Pepe pump on Telegram. Meanwhile, Morgan Stanley is predicting the dollar will fall 9% over the next year. Jamie Dimon spooked about bond market instability, and BNP Paribas says the U.S. currency is heading into a secular downturn. Translation: the money gods are nervous. Bitcoin, meanwhile, is holding strong above $100,000 and flexing harder than ever. The message is clear. If fiat's a dumpster fire, Bitcoin is the digital bunker. I'm Max Voltz, and this is Crypto Wars. Because when Elon Musk stops trolling and starts talking debt, you know the clown show's over and the real circus is just beginning. From Elon nuking the dollar to Circle printing fiat faster than the Fed, Circle just pulled off the IPO of the year and possibly the decade for crypto investors, launching onto the NYSE like a stablecoin-powered moon rocket.
Circle surging. Tanea McKeel is tracking that for us at this moment. Tanea?
Yeah, Scott, you don't see a lot of IPOs doubling in their debut. The shares opened at $69 after being priced at $31 last night. At one point, it traded as high as about $103. Trading volume right now about 39 million, so exceeding the number of those freely floating shares available for trading. An enormous success in its second attempt at going public. A big part of that, of course, thanks to the much more crypto-friendly administration under President Trump. This company, Scott, has been around for more than a decade. It didn't become focused on stablecoins until about 2018, and Wall Street now saying this sector of crypto could grow tenfold in the next 5 years. And in an industry that is rife with scams and scandal and meme mania, Circle really is known for its commitment to regulatory compliance, has a very clean reputation. So as you start to see banks, payments firms, fintechs, and more, Uber, I think I saw headlines today, moving into stablecoins, that advantage could really continue to serve them. The stock up 148% right now.
Yeah.
Scott?
Ticker symbol CRCO opened at $69 and closed at a spicy $82.84, up 167% from its IPO price. Boom, instant unicorn flex. Circle raised $1.05 billion, 60% of it from existing shareholders cashing out like it's the top. Axo, Fidelity, General Catalyst, all got their bags blessed by TradFi's thirst for stablecoin exposure. Demand was so crazy, insiders say it was 25 to 30 times oversubscribed. That's not an IPO. That's a FOMO-driven liquidity orgy. This move catapults Circle to an $18 billion valuation and slaps a giant "Yes, we can" sticker on the backs of every crypto startup dreaming of an exit. Remember, Circle almost SPAC'd in 2021. That fell apart. But now, they're laughing all the way to their offshore-backed treasury wallet. Most of Circle's money still comes from USDC, the dollar-backed stablecoin that plays second fiddle to Tether, but with today's price action, it might start writing the melody. Regulators are still dragging their feet on stablecoin laws, but that didn't stop Wall Street from backing the biggest crypto IPO since Coinbase. And here's the kicker. While the U.S. Treasury issues debt backed by vibes and Congress, Circle's issuing money backed by demand. Feels like the power dynamic just flipped, from IPOs printing billions to regulators finally admitting they can't regulate Bitcoin. In a twist that's half regulatory theater, half crypto sitcom, the EU's MiCA framework, designed to bring law and order to the Wild West of digital assets, has officially declared Bitcoin and Ethereum ungovernable. Why? Because no one runs them. Shocker. Ireland's central bank deputy governor, Mary Elizabeth McMahon, gave a keynote in Dublin confirming what we've known since Genesis Block. Decentralized assets without identifiable issuers, like BTC and ETH, are outside the scope of MiCA. No issuer, no leash. The suits tried to build a box, but Bitcoin doesn't do boxes. But guess what is getting boxed in? XRP. According to McMahon and Mika watchdogs, Ripple's token qualifies as a utility token under the new rules. Because, unlike Bitcoin or Ethereum, XRP has a daddy, and his name is Ripple Labs. That means XRP gets the full EU regulatory hug, rules, oversight, reporting. In return, it gets a gold star as a compliant utility token. You know, like a Chuck E. Cheese token with a lawyer. Look, XRP has utility, sure, but let's not pretend it's winning the decentralization Olympics. While Bitcoin and Ethereum are being excluded for being too pure, too trustless, too free, Ripple's out here getting patted on the head for playing nice with Brussels. From XRP begging for EU approval, to Bitcoin quietly front-running the collapse of fiat. The US just printed its way into another record. The M2 money supply has hit $21.86 trillion. That's not a number. That's a flashing red siren screaming, "Buy Bitcoin" in 200-point font. M2 includes all the cash, checking deposits, savings accounts, and money market funds sloshing around in the system. And now, that slosh is a tidal wave. It's a record high fueled by exploding debt, runaway spending, and a treasury running on vibes and vibes alone. Analysts are sounding off. Interest payments now eat up 20% of federal revenue. The debt-to-GDP ratio is starting to look like Argentina with better PR. And the only thing more inflated than CPI numbers is Jerome Powell's confidence. But here's the kicker. Bitcoin has historically followed M2 growth with a 12-week lag. So if the money supply is going vertical, don't be surprised if Bitcoin lights up the charts again by late summer. As analyst Fred Krueger put it, stocks leak, housing leaks, fiat bleeds out. Bitcoin doesn't leak, and it's growing at 40% a year. From central banks leaking dollars to Korean boy bands stacking sats, the worlds of laser eyes and laser choreography just collided. K-Wave Media, a NASDAQ-listed Korean entertainment firm, just went full Bitcoiner. And no, this isn't fan fiction. This is K-pop meets crypto capitalism. K-Wave Media, ticker KWM, signed a deal to raise $500 million, and they're using a big chunk of it to buy, hold, and yield farm Bitcoin. That's right. BTS's spiritual cousins are now stacking sats like they're headlining a Ledger-sponsored world tour. Shares jumped 126% after the announcement, because apparently nothing says financial alpha like buying the dip with concert merch profits. K-Wave isn't stopping at just stacking. This is a full-on Bitcoin native transformation. They're launching Lightning Network nodes, integrating Web3 payments for K-pop merchandise, and positioning themselves as the metaplanet of Korea. If you thought Bitcoin adoption was just for banks, autocrats, and tech bros, guess again. It's for choreographed rebellion, synchronized decentralization, and digital fan bases who know their seed phrases. From K-pop stacking Bitcoin to Uber choosing play money over the real deal. Uber CEO Dara Khosrowshahi just revealed the company's latest innovation, pretending stablecoins are edgy, in a recent interview. He said Uber is considering accepting crypto payments, but only the safe kind. You know, the kind wrapped in fiat, shrink-wrapped by banks, and spoon-fed to regulators. Stablecoins. Khosrowshahi said stablecoins could lower transaction costs for global payments. Cool insight, Dara. Welcome to 2013. Meanwhile, Bitcoin's been doing that without central banks, middlemen, or approval from Janet Yellen. But don't hold your breath. Uber's still in the study phase. Translation: nothing's happening. They've been studying crypto since the pandemic, and the only thing they've committed to is selling your ride history to advertisers. And just in case anyone thought Uber might go full orange pill, nope. The CEO straight up said Bitcoin isn't on the table. Store of value? Too risky. Decentralized money? Too scary. Permissionless innovation? Nah, they'll pass. Unless it comes with a compliance manual and a JP Morgan hotline. So, in summary, Uber might accept crypto, but only if it's fiat in cosplay. Well, that wraps up tonight's transmission. I'm Max Voltz, and this is Crypto Wars. In this war of digits and debt, your click is gunpowder. Your share? Heavy artillery. So if you laughed, learned, or just like chaos with a side of truth, smash that like button, subscribe, and reload for tomorrow. Good night, renegades. Stay sovereign and stay spicy.